Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Thursday, the 14th. It's Valentine's Day, so I hope you're having a great Valentine's Day. Hopefully it's warm wherever you are, or at least not snowy. It is not warm, and it is snowy in Utah once again, as has been very normal for us as of late. Hope everybody had a great day both in and out of the market. Markets started off a little rocky this morning. On retail sales, they weren't good. We'll call it that. Hello, Patricia. Great to see you, and hope you're having a fantastic day. And you're warm wherever you are, or at least not covered in snow. It has been snowing pretty much nonstop almost all week. We had a day off, but it has been going, making up for it today. It's not stopped all day long. So, and hello, Melissa. Great to see you. I talked to Melissa a little earlier. Hello, Micah. Great to see you. It's weird. I have two screens, and so I look over there to see you guys, and I look over here to look at my screen. So a little weird. But the market started rocky. It really did. We really did fight back nicely, as the bulls aren't going to give this thing up without a fight today, no doubt about it. Once again, we've seen this a few times lately. The last little bit of the trading day, we really saw some selling. This is our last 15-minute candlestick here on the S&P 500. There was some profit taking or whatever it was to close the day off. Nice little fight back. Not, really a whole lot to see here, I don't think. But those retail sales, they were definitely weak. There's no really other way to spin that, I don't think. At least for me, there is not. Of course, when we see a candle on the intraday that looks like that, we're going to get this, right? Nice little doji candle. Weren't able to, closing basically right at that 200-day moving average here on the S&P. So not really anything has changed, but there's maybe one thing, right? And again, not going to make too big of a deal of it. But now, next time I, see some bad news, there was also retail sales, right? So I'm definitely interested in seeing the price action and, tomorrow to see how traders react to that here today. This, movement today, not a lot of follow through today. Not much in my mind has changed from a technical point of view. And it's, certainly not a bearish signal, but it's one of those things that can weigh in the back of our mind, right? And those things can add up. Usually one piece of bad news doesn't mean much to the market, right? Unless it wants it to that day. But when they kind of add up, they certainly can. And good afternoon, Tanner. Great to see you, my friend. I hope you're staying warm. I know you're a fellow Rocky Mountain liver, so I hope you're staying warm and out of the snow here. So going ahead into tomorrow, I really don't think anything has changed. We're still above our averages. We were, still hanging right around that 200-period moving average on the S&P 500. Very interesting to see when we take out these little highs from the last 2 days, if we're able to, if there's a little oomph behind that. We will have to wait and see, of course. NASDAQ continues to use that 200 as resistance. It is a flat resistance. And for those of you new here, when we're looking at these long-term averages like the 200-day moving average, which of course is the green average you see on my chart, when we're flat like this, it's not quite, in my opinion, at least as big of a deal. That can certainly be a support and resistance catalyst. But when it's flat, it usually means it's sideways. And so it's not quite as strong, at least in my opinion, it's not. But it definitely has turned out to be a bit of a challenge on the NASDAQ this time around. Bumping our head, last week, bumping our head yesterday. And again, that was our high point today, relatively speaking. I mean, nothing was up bigger, down big, at least from an index perspective here today. NASDAQ closing in the green, but really kind of calling it good once it tested that 200 average. I think we now need to get a little bit of a break there to get some, some conviction. Beyond that, we still have some room to run, just like we do in the S&P 500, but we're going to have to kind of come out of this little short-term hang around to get that, of course. Support, from what we've been talking about pretty much all week long. Just another day for me, whether it's on the S&P 500, our swing low that we placed back here on the NASDAQ. Now that we've seen this upward move, clear buying off of those Friday lows, for me, again, that is support. That is where we should stay above. And as long as we stay above that, I will overall be looking at things from a bullish perspective. Just another day to believe that, but maybe we're going to go into one of those little sideways things. It's going to be fun when we go look at discretionary because they are stuck in a real little sideways thing, right? So over in the Dow Jones, very much like the S&P, a little bit of a doji here today. Not a whole lot to see here. Still holding support, still above our moving average. No real sell signals from a daily standpoint have developed in my mind just yet. So again, futures were up early. Seemed like it might be one of those days, and then retail sales came in and kind of threw some cold water on it. So maybe it wanted to make a run. We were showing some pretty good strength yesterday. Overall, we continue to do so, but it wasn't meant to be here today. Still some room, though, just like all of our other indexes. Russell is the interesting one from a technical point of view because it's hanging out right at that 1550, that old support level, that old resistance level, that big old round number. Kind of bumped our head in that general ballpark for a couple of days now. I know a lot of traders, myself included, are thinking that's, a significant test. Not that it can't, pass the test, but it's not, it's a tough one, with all of that history plus that nice round number. No reason in my mind to think bearish, but definitely thinking, hey, if this knocks me down some, probably not the most surprising thing that I have ever seen. A break beyond that, probably a little more oomph, and there's, possibility with where our indexes are. Maybe the NASDAQ could be breaking the 200 about the same time, that the Russell might actually lead the way if we are going to break, at least in the shorter term. We're just so close. If the Russell wants to go up anymore, it basically has to break out of that resistance level. There's really no two ways around that. So not a lot has changed here today. Support still holding, still above short-term averages. Resistance zones, for the most part, have not changed. But we're having a hard time generating any buzz after, kind of that nice start to the week. Here overall, we're seeing plenty of things move on an individual level. A lot of that is earnings related. You saw some big movers both ways. NVIDIA is one of the big names that came out tonight. Really liked on the earnings front, at least the big name companies here today. You had Applied Materials is coming out tonight. Don't know what their report is. I did see NVIDIA was up like 9% in pre-market or in post-market trading. I did not have a chance to see what their earnings report was, but I would guess that at least at first glance it was positive, up 9% in the after-hours market. We'll dig in, see what that has for us, and then tomorrow we have John Deere, kind of maybe the biggest name coming out, but really pretty light, especially by the standards we're used to seeing over the last 3 weeks. So we're winding down here on earnings. Over in materials, we tested resistance yesterday, sold off a little bit. Again, everything pretty much gapped down on the open. When the market does that, most things, as many of you know, are going to do just that, right? So no surprise. Did kind of hold its own. Not really anything to see here. In my mind, we're still, overall to the bullish side as long as we're holding that 52 support level. A break of this resistance level, I will definitely look at a bullish signal, and I'm looking for that from a seasonality perspective. I am interested, in the material sector and the energy sector if they can break. And boy, the energy sector is knocking on that door right now, it looks like. So as we will soon see, resistance really staying the same spot. So overall, not a lot has changed. Wouldn't mind seeing a candle like this tomorrow and then a break next week. I always prefer to break early in the week than late. Not that it really even matters. It's just kind of a thing. I guess I think I'm probably not alone in that department. Energy, really interesting. We did, and at some point today, I thought we were honestly going to have the discussion that we closed above that old support level, that resistance zone that we have been fighting with. It was in 65, in 65.50, 56 was actually the high point. So it was enough for me to be, we're going to have an honest debate if this is a break or is it not. By the time the day had completed, though, closing right at 65.07, I don't think you can call that a break. But of course, you guys know me. I'm a little more on the conservative side. You have to sell me. If you are very aggressive, I think maybe you could make an argument that taking out today's high could be the confirmation of a break. I'm not there yet, but we are knocking on that door. Might be time to go look if you're interested in breaks and pop in to your energy watch list. There's some interesting looking things. We were looking at them early, or Melissa and I were looking at them earlier. We've got ExxonMobil, very, very similar. to the way that the the XLE is looking. Almost looks like the exact same chart for the most part. Just clear form of resistance, very clear level of support. Keep banging our head in there. You've got some things that aren't going to be looking as interesting, at least to you. For me, EOG is one of those things. Definitely showing some relatively weakness compared to how the other energy stocks have been holding up. But there's some definitely interesting ones. I like SLB as a reversal type of situation. If we break resistance in the energy, overall energy, and of course SLB has to break its own. Now these are just things to be looking at. Obviously, I'll never tell you what to do with your money. It's not my place, nor can I. But I think it's probably time, if you're interested in a breakout within that sector, probably should be thinking about what that exactly means to you. May not happen ever. May not happen tomorrow, but probably best to be prepared for when and if it does happen. So I'd work through your energy stocks, see if anything's kind of looking more interesting than others. There's even some pullbacky ones. I think it was, let me come back in here for just a second. VNO, I believe, Venero was kind of in Valero was kind of in a little bit of a pullback, so after popping up on earnings. So definitely some interesting charts if we can break out. Definitely an area that should be interesting, if nothing else. We still have to break, though. And as I said many times, never assume because you're preparing for a break that it's going to break. That is easy to sometimes talk yourself into, but not a really good way to go about it. So over in financials, really got pushed down. We had AIG, who really kind of missed the mark with earnings. And while they're not necessarily the end-all be-all of the financial sector, they're definitely a name. We all know AIG, right? We've all heard of them long before we were probably following the markets. Not a good report, definitely sold off, a lot of weakness over there. Plus the gap down on the open probably equals not a very great day in the financial sector. As we've talked about before, really the signal at this point, I think, for me, and it's just the longer it takes, the more it has to be this, is going to be the break. I still am interested in this sector personally, but I think it really you really are looking at with the way it's behaving, with the way some of these charts are lining up, at least in my mind, the break is really the play. Are there some pullbacks? Probably. Am I going to be all that interested in them? Probably not. So it's probably one of those break or maybe something new will develop in the days to come. Right now, I do think much like the rest of our overall market, we can look to this low that we put in on Friday as our support level. If that breaks, that probably will be a sign that, you probably need to get a little more neutral, if nothing else, in the financial sector. At least that's the way that I will interpret it. Probably won't be bearish until we break this low. Now, I'm not necessarily expecting that to happen, but never hurts to be thinking ahead. And neutral break here, probably bearish if we break here. Definitely bullish if we break to the upside. So this is going to be one of those K-trade type situations where I'm just going to have to let it play out until it clears itself up. Do like a break, though, if we can get it. Over in the industrials, well, we know the industrials is going to take a lot more than, a slow day at the office, right? Now, they did jump down with the overall market today, but if you look at their intraday action, I mean, they were basically they popped and they kind of hung out all day long. So it continues to remain a very strong area. Traders are still very quick to buy stocks in this area up. This has been quite a run. No two ways about that. Still room to go too. Still plenty of room until our next real level of resistance, in my opinion, at least. That's a pretty big one. We've talked before. We've seen a lot of history in that $77 range. Lots of, an old breakout point, failed breakout point. So we'll keep an eye on it if and when we get there. I expect, based off what I see today, I expect it to get there. I don't see a single bearish sign from a broad perspective in the industrial sector right now. Just like NASDAQ, we're having a hard time in tech breaking that 200. Continues to cause us some trouble. Still showing some nice overall movement. I'm going to add another line here, at least try to in one try. Hey, yay me! I don't do that very often. I couldn't do it. I had to draw the second line. I couldn't have just one straight line. That's lining up with that old swing high, right? So between the 200 and that old swing high, this is a very interesting profit-taking location off of this move. I get it. Never going to have to tell me why you want to sell at resistance. I will always understand that. Beyond that, still some room to run. No reason, at least in my mind, to think that we have to turn from here. Just like pretty much everything else, that Friday swing low is, at least as of right now, that potential turning point. We're a long ways away from that. I still lean towards a break to the upside. That is what I'm overall looking for. We'll see if I get it, though. You never know, but it never hurts to ask, right? So Staples, weird development. Coca-Cola coming out, and really they sold, right? You guys, I know you guys talked about it in the halftime report. A lot of disappointment after the Coca-Cola's earnings report, dragging the entire sector down with it. And one of the things that I never want to see. Now, you guys know this has been an area I've been a little shy on as of late. So, and that's not going to change now that, it was this trend line. You need to see it take that out. We saw it happen, but now bad earnings, and I have to deal with it all over again. For me, it's still going to be one of those areas, that's, I'm being very cautious. Individually, I am very okay with individual stocks within the sector, but as a whole, I'm going to be really picky, I guess might be a good way to say that. That is the last type of price action I want to see, as I was starting to warm up to the area, that break, and now I have to worry about that all over again. Not seeing bearish signals, so I'm not saying I'm going short or bearish on this sector, but I'm back into the hanging on the fence with Coach T. Neither one of us were ever afraid to hang out on the fence. So we did Doji. We did see a nice bounce overall. Coke, I mean, that's a big name, right? One of the, if not the biggest in this sector. So them really selling off is going to have a negative impact. A little surprised how much they moved. It is Coca-Cola after all, but you should never be surprised when people react, right? You'll see plenty of crazy things on earnings, huge moves. Sometimes they'll make sense. Oh, that was great earnings. Sometimes won't make any sense. And it really doesn't matter. The price action is the king. I'll be watching that high point as that next level of resistance after, failing at that. Again, am I overly concerned? No, but am I a coward? Yeah, you guys know me. I am a wimp. I am pretty conservative. And if I'm not liking pretty much everything about you, I'm not afraid to put you on the watch list and call it good. So utilities continue to consolidate, not so much pulling back after their recent breakout, but we've really spent much of the week back and forth. It's still, a little bit volatile on the intraday. Overall, we're seeing some pretty good, wicks, to both sides pretty much every single day. As long as we're above 55 overall, I do think you look at this from a bullish point of view. That, of course, is the trend line that that I was worried about, that did cause us a little bit of resistance before taking it out, those old highs. So 55 continues to be the area. Overall, no reason, from the looks of this, I still have no reason to believe we're not going to continue to push up towards that $57 resistance level. So it is utilities, and it's not maybe the most exciting thing, but I do feel the signals to the bullish side are still there, and probably will be as long as we do hold that 55-ish level of support. Healthcare breaking, continuing yesterday. Yesterday, of course, we closed above resistance in a little bit of a doji. Carried on here today. Actually, we're up pretty big here today. I think we actually pushed $92, and we were close, $91.88. We did sell off the highs, much like the overall market. Some late day profit taking, but definitely, closing in the green after a day like today, not a bad thing. Not a bad thing. That what that really tells me is that other people are looking at the space that we have between this resistance level and our next challenge collectively within this sector as buying opportunities. So I will continue to be doing that as well. Again, if just to be make sure everybody's on the same page here, for me at least, this swing low is going to be the primary short-term level of support. We've seen plenty of buying, and that's what I want to see when I'm trying to identify support, right? Where did people put their money? It stopped going down and people started buying back into it. So I think this continues to show some really nice signals. Overall, I love the room within the sector. I generally like this sector as it's just kind of one of those things that for whatever reason I'm naturally drawn to. So it is one of my things I like to follow. But beyond that, I think the signals are there overall. So definitely going to be expecting to probably find some interesting candidates for the watch list tomorrow as I go through my Friday routine within this sector. And good afternoon, Lorena. Great to see you. Hope you're having a fantastic little Thursday, and happy Valentine's Day to you. discretionary is caught in a weird little pinch. Those of you who know Coach Mark, he's talked about pinches. I think I coined the term pinch, but he might remember it differently. But I know we came up with it in my kitchen together. And we're starting to develop a little bit of a pinch between the 9 EMA and this resistance zone from days gone by. Right, it was a high point yesterday, but it really was a high point on 2 separate occasions last fall. So we're developing a little bit of that pinch type of situation where sooner or later we're either going to kind of push to the upside or need to push a little bit to the downside to maybe take a little breather to take another run at it. This continues to be a mixed area. There are interesting things. Lowe's, was a nice little mover this week. Going into their upcoming earnings. So you've seen some nice movers, but you've seen some, we've seen some interesting things too, right? So that's really, things are really decoupled over in that sector. Of course, Amazon is, a big, if Amazon's there, it's going to be a big component of it. And so they are definitely part of that, maybe why it's having a hard time pushing through. But I do find it interesting resistance in that 9 EMA. One of them is going to have to give in the very near future because we're getting caught up in a little bit of a pinch in there for sure. And over in real estate, just more of the same. It's not really doing a lot. It's just inching up. And that's really what it's done. This has been a really weird consolidation period. It's worked into resistance. It's never really done enough. Maybe we had that one day where Ilka, kind of brought up, how do you get in? You need that upward movement the next day type of a deal. At least I do. Really, it's been one of those weird, just kind of slow drift consolidations. Just kind of keeps finding a way up and up and up. And somehow you wake up and you're saying, wow, these guys are pushing that 35 resistance. We worked into 34.92 here today. And of course, if we look at this from a longer term perspective, I mean, that's the high point. That is the high point that this ETF has ever been. Overall, the stocks in this sector, for the most part, to me, look good. We're seeing things, breaking resistance, putting in new highs within this sector. But that was a big turnaround. You could have said the same things back at 35, back in 16. And so I'll be keeping a really close eye on that. I would like it to pull back off of that or have a nice slow consolidation. It's been very hot, been very strong. Again, much like industrials, maybe even more so. It's just not quite as exciting, maybe to me, at least name wise. It's any excuse to buy, and traders have been looking for anyone. It's no pullback. The best you can hope for is a slight upward skewing consolidation period. Keep an eye on 35 though. I mean, the only thing we know with absolute certainty is last time we got there, we stopped being really hot and got real cold. Not saying it's going to happen again, just saying, right? These things tend to remember. Beyond that, nice little break. That would be a very nice bullish signal, signifying there's still room in this rally, which has been extremely impressive. There's no doubt. Over in communication services, much like the rest of everything, just not really making too much of a decision one way or another. Still holding support, putting a little bit of intraday resistance together over the last couple of days, using the same intraday high today as yesterday. Still room before we work into resistance. That's going to be a challenge, potentially at around $47, a swing high, an old floor, or old level of resistance. So, but of course, as many of you know, there's Facebook is a big component of this. Google and Goog, both shares of Alphabet Inc. For whatever reason, they changed their name to that. I don't know, but whatever, they're big players. They make up a lot of this overall ETF. So for the most part, I don't really think your opinions have probably changed. Support is still holding. We still know where resistance is. Just a little bit of indecision here, just like a lot of things overall in the market right now. As we look at the VIX, no surprises. This is the first time I looked at the VIX today. This is usually the first and only time I look at the VIX is when we're hanging out in here together. And to no surprise, really, maybe had a little bit of a spike because of, we might be tanking, and I don't know that anybody really thought this, but, we have that bad retail. Maybe, that's going to be a reason to sell. So maybe a little bit of a spike as the day progressed. Clearly, that wasn't enough, at least by itself, to get people off of the market. So same general ballpark, not really a lot has changed again right now. Traders seem to feel like they've got a handle on the behavior of the market. And as long as they do, that VIX probably isn't going to be doing a whole lot of spiking. When they when they stop feeling that way, it will though, right? Over in the dollar, right at 97.04, we continue to fight at this range. Again, kind of like, the real estate, we're kind of, skewed just ever so slightly to the bullish side. Being able to constantly make new highs. We've made new highs, each and every day this week, but it's just never really been a clean break, in my mind at least, of that $97 mark. Of course, overall, very sideways, short term, a lot of momentum in the dollar. We do want to keep an eye on those highs. That's a potential big level of resistance. If we can actually ever, close, and really, confirm this little break at around 97, up into that 97.60 probably should be not that huge of a deal from a price appreciation perspective, but we're just having a hard time. But again, we know those of us, I know some of you guys are new to the market recap, and welcome. We're happy to have you here. It's awesome to have more of you. But some of us were following this back when we were fighting with $97 before on the market recap together. And we remember, I'm sure they remember just like I do, there was a lot of back and forth trying to figure that out. So it might take a minute to decide. Once it does, realistically, I don't think there's any reason why it doesn't have a pretty relatively easy task to fill up into that 97.50, 97.60 range. Right now, I do think we can look at this 96.50 and these lows that we basically put in for the course of the week as our short-term support level. But for me, right now, overall, short-term is fun, but this is really in a sideways range, from a longer-term perspective. And that, of course, is how I'm going to continue to treat it until it cleanly breaks one way or the other. And good afternoon, Jimbo. Now, hey, Jim, James, or Jimbo, what do you prefer? I've seen you go by all of them. So, I never know if it's, I've called you all of them at least once. So let me know what you like, and I'll stick with it. So over in gold, we really pushed down into the to that breakout point while probably you were sleeping. Let's just go into an hourly chart here, working all the way down. Now we got into that range, and boy, did we hop. We really did hop off of that as soon as we got close enough to 13. Of course, we kind of say that in quotation marks because it's more an area than maybe a absolute number. Really a nice buy, a nice little bounce, at least off of the short-term intraday when we tested that point. Still don't think we're getting, any new trading signals. Still think everything is in the same place. Still holding, support that are still making higher highs and higher lows. But right now we are stuck in a little bit of a sideways range-bound situation in gold. And until we kind of get some movement to the upside, I think we should probably expect it to that kind of slightly bullish bias. If it does falter at 13, and I won't call that bearish, personally, but I do think we could probably expect maybe a little more of a sell-off. Now, I expect 13 to be tough to break. It's just such a big deal, and it's such a big number that it should be so tempting to any, automated system or something like that to buy it at 13 or approximately 13. But we're having a hard time really building, but that's okay. We had a really good run, right? There was a time, 3 weeks ago where, we were looking at 1360 as our next level of resistance, and we were at 1327 or 8. We made half of that up in almost 3 days. That's just not realistic, right? Anything can happen, but that's not going to continue long term. So a pullback was definitely in order, and I don't think we should be complaining about it by any stretch of the imagination. Saw more downward movement in silver following that break of that little intraday floor that we saw yesterday. We really set it up for 5 trading days, broke it yesterday and sold. Really was looking pretty grim, but much like gold, kind of caught that intraday low and had some nice upward movement to finish the day. I still think from a bullish point of view, the trade isn't there yet. A position point of view, I'm fine if I'm still here, if I got some covered calls on it or something like that. But for me, it needs to do something. It's just like gold in the sense that if this is a pullback, I don't think the buy signals are there. Would I fault somebody for buying silver or gold today? No, I wouldn't. It definitely wouldn't be the worst bullish trade that you could make, but we can do better, I think. And right now the signals just aren't quite there for that turnaround. Hopefully we will see them, but I guess we'll see it together one way or the other. Our old friends in natural gas just continue to be our old friends in natural gas, working back into that low, though. Of course, it's Friday, so speaking for myself, nothing I can do about it. But of course, they've put together this little intraday floor over the course of the last little while. A break of that, there is room. There's nothing until 250, but tomorrow's Friday, and you're not going to see me holding natural gas over the weekend in any way, shape, or form. So whatever you're going to do, natural gas, you're going to have to do it without me for another week. Interesting that we're trying to hold that little floor. But again, on a Friday for me, that's just, nothing really has changed. One of these days, though, we're going to look at natural gas and it's going to be a different story. It's just not today. So crude, on the other hand, definitely a story to be told over there. For those of you who did trade into the retracement moving in on Tuesday, very nicely done. We are now approaching resistance and we got a little bit of room. I would definitely be kind of calling it 55, if you will, while looking at our highs back here at 55.75. So if you are here, I don't know, I certainly don't want to tell you what to do with your trade, but I'd be thinking about what this resistance means, whether that means you want to take some profits, you don't care, you want to sell some calls against your position, you want to scale out. We're getting close to resistance going into the weekend. So whatever your decision is, that is definitely your own. And I would expect no less of you guys, but make sure you're thinking about it. But very nicely done for those, and a nice little 3-day rally off of that hammer candlestick. No two ways about it. Beyond that resistance, for me, nothing has changed. I really like as a buy beyond beyond that resistance level. Expect to work into that 69.50 range or so. To be relatively easy if and when we break that. You never know for sure, but those are my expectations. Once we get into that range, we're going to be dealing with that old trend line. We're going to be dealing with that old support breakout point, that old support level. So that should be a bit of a challenge, but not really much from the break to the next level. And so that's definitely an area that I will be interested in if we're able to break it. If being the operative word, right? We're not there yet, but certainly some nice movement this week in the crude oil department. No two ways about that. And hats off to those of you who did trade into the pullback. I know a couple of you did, if nothing else. So nicely done. And I expect no less of you guys. I guess maybe one day I will be braver, but not today. Not today. Today I will say that's going to do it for today's market recap, guys. But as always, it is certainly my pleasure. And thank you guys so much for your time. It's always great hanging out with you guys a little bit. Going over the markets, never a dull moment here. If you are new around here, make sure you subscribe to the channel and hit that notification bell. Just a little easier to make sure you're always alerted to any new streams or videos that we've got going over here on our YouTube channel. And be sure to follow us over at Tackle Trading on Twitter as well if you want to just kind of hang out with the Twitter crew over there. We would love to say that. So, so I hear you, Tanner. So, and if you do would like me to get you added to our Team Tackle Twitter list, you can always find me. You guys know how to find me, but if you don't, on Twitter, it's Frank Martin 23. You can find me in the clubhouse. You can tell me here. I probably will forget because, well, that's what I do, but I will happily get you added if you need me to do so. So just let me know. If you enjoy the market recap, it is always really helpful and appreciated if you do give it a thumbs up just to let us know that it's helpful and to let the YouTube overlords know that you think it's helpful and worth watching. Helps us get the message out. So thank you so much for that in advance. With that, ladies and gentlemen, get out of here. Enjoy your Thursday. Pro members, have fun in the Cash Flow Club here tonight. If you are not doing the Cash Flow Club on Valentine's Day, I get it. You can catch the recording. We understand that. Happy Valentine's Day, you guys. Enjoy time with the loved ones. We'll pick right back up, same in channel time and channel here tomorrow as we wrap up yet another week. So thank you so much, ladies and gentlemen. Have a great day. See you tomorrow.